Have you ever wondered about those huge global shifts that happen so quietly you barely notice them? I mean, there's a financial pivot happening right now that has gotten almost zero coverage in Western media.
And yet, it could fundamentally change global economics.
Exactly. We're talking about the rapid internationalization of the Chinese renminbi, the RMB, and it's being driven by BRICS. When you connect the dots here, it completely changes how we have to look at financial stability going forward.
It really does. And the momentum is what's so striking. Today, we're going to get into that, focusing on really three connected things: the scale of BRICS, the globalization of the RMB itself, and then
Physical connection.
the physical connection. How all this finance connects to critical mineral supply chains. We want to pull out the most surprising data here and figure out what it all means.
Okay, so let's start with the foundational piece, the big one. BRICS has launched a new payment system. It's up and running.
It's operational now, and the reality is that 185 countries can now technically conduct trade using Chinese currency.
So they can just bypass the US dollar entirely.
Yeah.
That's a huge deal for how trade actually, works on the ground.
It's a huge deal, and when you unpack this shift in power, the long-term forecasts are what really grab your attention. If you look out to, say, 2050, the projections are stark.
How stark are we talking? Give us the numbers.
Well, the current forecasts suggest that by 2050, the G7 countries will control only about 18% of the world's GDP.
18%. That is a massive contraction of economic power from what we're used to.
It is a massive contraction. Now, compare that to BRICS. The forecast there is that they'll control nearly 50% of global GDP.
Wow.
And, these calculations often use purchasing power parity, which gives developing economies more weight. But no matter how you cut it, the trend is a fundamental reversal of the post-war order.
So when you see headlines in major Western outlets saying BRICS is becoming hard to ignore, it's not just talk. It's an acknowledgement of these numbers. And what's really telling politically is that detail about France considering an invitation for China's Xi Jinping to its G7 meeting next year.
The fact that it's even on the table shows you how seriously this is being taken at the highest levels.
So what's the appeal? Why are so many countries lining up?
The motivation for, the vast majority of these countries in Africa, Latin America, the Middle East, it's pretty simple. They're looking for an alternative. They want to get out from under the, let's say, the historical dominance of the US dollar.
And the threat of sanctions that comes with it.
And the threat of sanctions and economic leverage, exactly. BRICS is offering a mature, decentralized option.
And for decades, the main argument against this was always, well, the RMB isn't fully convertible. That was supposed to be the big wall.
The immovable obstacle, or so we were told. But if you look at the raw data, that assumption is just dissolving.
Oh, quickly.
Incredibly quickly. Chinese banks have quadrupled the amount of RMB loans, deposits, and bond investments held overseas in just the last 5 years.
Quadrupled.
The total now is over $480 billion equivalent. It's just a rapid surge that shows the yuan is establishing itself as a legitimate currency outside of China.
And we're seeing this play out in the developing world in very practical ways. They're not just trading with it, they're switching their national financing.
Right. We've seen African countries like Kenya, Angola, Ethiopia. In just the last couple of months, they've switched major state loans from US dollars to Chinese RMB.
And it's not just Africa. We're seeing it in bond markets too, right?
All over. Indonesia and Slovenia just announced plans to issue RMB bonds. Kazakhstan's development bank sold a 2 billion RMB bond at a really low yield, 3.3%. It's a clear geographical pattern of confidence.
Okay, let's talk about the connectivity, because China's strategy in Africa is it's profound. A zero-tariff trade agreement with 53 African nations.
53. That's securing the coordinated effort of an entire continent. It's a clear move to reshape global governance.
And it's not just Africa. Look at ASEAN, the Association of Southeast Asian Nations.
China's #1 trading partner. Over $771 billion in trade last year.
And what did they do? Right after a high-profile U.S. visit to the region, they upgraded their free trade pact with China.
The timing of that is just, it's very telling, isn't it? It signals a clear strategic choice.
And the Singapore Prime Minister, Lawrence Wong, he was very direct about it. He said the upgrade reduces trade barriers and strengthens supply chain connectivity. It seems they're just choosing the partner that offers more stability.
You can see that confidence reflected directly in investor behavior, especially with these so-called Dim sum bonds, yuan bonds sold outside China.
Right. The Indonesia example is perfect. They raised over $842 million for their first sale of these bonds.
And here's the real nugget. They offered 6 billion yuan worth of bonds.
Okay.
But investors placed orders for 18 billion yuan.
18 billion. So it was 3 times oversubscribed.
3 times. That tells you international investors are not just comfortable holding Chinese currency. They're bullish on it. They're actively chasing it.
All of this activity needs plumbing, right, and infrastructure to support it.
Of course. And that's China's cross-border interbank payment system, or KIPS.
And the scale of KIPS is just mind-boggling. It processes, nearly 13 trillion yuan every quarter?
Every single quarter. Annually, that's over 50 trillion yuan. It connects 4,800 banks across 185 countries. It's a fully functioning parallel system to the West, and it's processing massive volumes.
And it's not just theoretical. There are real BRICS projects giving it purpose.
Exactly, like the first ever BRICS loan between China and South Africa done entirely in Chinese yuan. And crucially, those funds are going directly into African development, infrastructure, energy, education.
That's the appeal for the Global South, a direct funding mechanism outside the established Western system.
And if you look at the macro data from SWIFT, the RMB's share of global trade finance has quadrupled in 3 years. It's now at 7.6%, making it the second most used currency for that.
And even major U.S. partners are getting in on it. Korea signed a currency swap agreement with China worth over $49 billion.
A huge deal. It allows them to just settle trade in their own currencies. No need for the U.S. dollar in these massive transactions. The system is live.
So we've laid out this huge financial pivot. It's happening. It's operational. But now we have to ask the next question. What about the things this finance actually pays for? What's the tangible, physical result of all this?
That is the critical link to make. This financial shift has immediate implications for geopolitics and for physical resources. We have to talk about critical minerals.
Specifically copper.
Specifically copper. It is absolutely central to energy security, supply chain security, everything. It's the backbone of electrification.
Why copper? What makes it the bottleneck?
Well, because you can't build anything modern without huge amounts of it. EVs, charging stations, data centers, upgrading the power grid. All of it requires exponentially more copper than the old economy. It's fundamental.
Which leads to a strategic problem. The West is suddenly realizing that relying on foreign copper is a massive strategic risk.
A massive risk, especially when those same resource-rich nations are gaining financial independence through BRICS. If they don't need U.S. dollar loans anymore.
They gain huge leverage over commodity prices.
Precisely. And this is leading to an aggressive push to onshore critical mineral supply chains. It's a strategic defensive reaction to this financial shift.
Yeah, we can see this happening in real time. For instance, the Palmer Project in southeast Alaska. An advanced stage copper project in a U.S. jurisdiction that's suddenly a strategic priority.
It's a perfect example. The project already has a substantial resource, about 17 million tons of high-grade material. The economics work.
And it's already de-risked. Over $116 million has already been invested. So it's got infrastructure, roads, permits. It's close to the finish line.
Right. And the political context is key here. The project has received direct support from the White House. This isn't just a mine. It's part of a geopolitical strategy to secure domestic supply chains.
So the financial independence of the Global South is directly forcing the West to secure its own physical resources.
That's the connection.
So let's just recap the 2 major threads we've followed. First, there's the undeniable operational momentum of BRICS and the RMB as a credible, functioning alternative to the dollar.
It's happening. And second, the immediate geopolitical reaction in the West, this realization that if you lose financial leverage, you absolutely must secure the physical assets like copper at home.
So what does this all mean looking ahead? Let's leave our listeners with a final thought. If the rise of BRICS and the RMB means resource-rich nations can fund their own growth without U.S. dollar loans,
Yeah.
how does that change the game for commodities?
It changes everything. It fundamentally flips the negotiating power. These nations gain autonomy. They can start to dictate the terms for critical resources like copper instead of just accepting terms. So the ultimate consequence, the thing you really have to watch, is leverage. Financial independence for these nations means leverage over the price and availability of every single commodity the future economy